Hi there, I'm Tyler Bollhorn. Welcome to the Stockscores market analysis for August 30th, 2010. I want to just highlight that we have set up the trading desk on a new website at www.tradescores.com. If you go to tradescores.com, you can log in and use many of the tools that I will be using in this video. And of course, there's a lot more to come. We also encourage you to play our trading challenge where you can play a virtual trading game, make your trades, and you'll get scores on the trades that you make. What I want to start off with is a look at the charts that I like to look at every week. And so I'm in the chart watch area looking at a list view of the charts. I'm actually going to switch that to gallery view, and you can see these little miniature charts of some of the key indexes that I like to follow. Now what we'll do, as I always do with this presentation, is just look at some of the charts and determine whether the market is likely to go up or down from here. Starting off with the Dow 30 ETF, the symbol of course is DIA, and we have been in a downward trend for a few weeks, coming on to a month now. And although we had a little bit of a rally on Friday, we failed to break the downward trend line. And in fact, all we really did was overcome some oversold conditions and rally back up to the trend line. And that was what I had been expecting and what I discussed in the daily newsletter that, of course, many of you are subscribers to. Next chart I'm going to take a look at is a chart of the Canadian dollar. I like to look at this chart because it's a real indication of global economic recovery, since the Canadian market is heavily based in commodities like oil and gold and such, copper, nickel, all that sort of hard metals, potash. When we see the Canadian dollar start to strengthen, that's because they are the globe is purchasing more of those commodities, and we really haven't seen that in the last little while, and so I think that tells us that the global economy is not doing great. I will point out, however, that the chart of the Canadian dollar is better than the chart of some of the U.S. equity indexes, and so I do think that the globe is doing better than the U.S., but still not particularly strong. I expect that the Canadian dollar will probably bounce around in here and not make a significant move to the upside. Of course, the strongest sector in the last month has been gold. Gold has rallied up to resistance, and I guess you could call this the fear trade, where investors are putting money into gold simply because of the uncertainty that tends to come with this time of year. What happens, of course, is that September is notoriously the worst month of the year for the stock market. And we've really seen the weakness in August. I'm not convinced that September will be that bad, although we could see a pretty good sell-off in the start of September and then a rebound towards the end of the month. Now when I look at the chart of gold, we have rallied up to resistance. The market is getting stuck there. If we can break through this resistance level, and that is a big if because we've tried on a number of occasions, but if the market can break through that resistance level, then we might be able to see a further rally in gold. And right now it's probably the best place to be is the gold mining stocks. Certainly the picks that I have made in the mining sector have been the leaders. But I'm hesitant to say jump in with both feet because this market is rallying into resistance. Oil has fallen off sort of in opposite direction of gold and hit support and bounce, which is what we'd expect to have happen. So we do have some pretty good support there. But the bias is down. We have a downward trend line. Maybe we rally up into here, but ultimately I think we're going to test those lows again. So I would look at a little rally here as something temporary, probably not going to be sustained unless we can break that cycle of falling tops on the chart for oil. The Nasdaq 100 is going to look a lot like the Dow 30. It does look a little bit better. The Nasdaq is not moving to new lows like the Dow is. You could argue that this market is building a head and shoulders bottom. If I do something like that, you can see the head and shoulders bottom forming with a neckline up here. But if you look at an even longer term chart of the Nasdaq, you will actually see that this is a shoulder in a head and shoulders top. There is another one over here that we can't see in this time frame. And so that worries me a bit. I don't know if the long-term picture is going to beat out the short-term picture, but I would not be eager to buy stocks right now. I'd be at a minimum looking for a break of this downward trend line, which we flirted with. We failed to break it. We tried late last week, and we really couldn't get through that downward trend line. And so until that happens, I would be very cautious with U.S. stocks. Same can be said of the S&P 500. That chart looks almost identical to the Dow and to the Nasdaq charts. A couple more charts to look at. This is a chart of the TSX. TSX is doing much better than the U.S. market on the strength of potash, which of course has got a buyout offer from BHP Billiton. That is a heavily weighted stock in this index, and you can see that it has made an upward surge. Plus, of course, the emphasis on gold stocks, and the Canadian banking sector is stronger than the U.S. banking sector. So the Canadian market looks good, but let's face it, we're stuck in a trading range here, and until we can break out of that trading range, although we've broken that downward trend line, upward potential is really from here to here. And if you think your distance down to support is to there, you've kind of got a one-to-one reward for risk trade-off if you are buying the Canadian market in general. So I'm not crazy about that. If we can get individual stocks that look good in the Canadian market, they're probably worth trading. But otherwise, stay pretty cautious with Canadian stocks as well. Well, finally, the U.S. dollar, which was in quite a slide up until this past month, and with strength in the U.S. dollar has come weakness in U.S. stocks. That makes sense because as the U.S. dollar rises, U.S. stocks get more expensive for people throughout Earth to purchase, and so the purchasing power of their money in buying U.S. stocks has been hurt, and that's why a good reason why the U.S. market has gone down. Of course, the other reason is that the U.S. dollar is really just a safe haven, and there is some uncertainty, concerns about a double-dip recession, that sort of thing, which is causing people to buy the U.S. dollar, put some money into U.S. treasuries, and that's why we're building this little optimistic pattern here. We broke the downward trend. We are now building an optimistic, very short-term ascending triangle right here. That's a sign of optimism because the bottoms are rising over time, and if we get a break through that resistance level, the U.S. dollar will climb and the U.S. stock markets will probably fall. Well, that has been the Stockscores market analysis for August 30th, 2010. I hope that you've enjoyed it. I hope that you can get something out of it. I encourage you to visit the new tradescores.com URL. All of the stuff that I've shown you is free to use, and I encourage you to get involved in our trading challenge game. It's a lot of fun, a great way to challenge yourself to improve your trading in the stock market. Have a great week and trade well.